Hello, everyone. Welcome to howtotrade.com. I'm Shane Vernier, and this is the weekly open. If you know me, if you followed any of my streams, I take it easy on a Monday. I don't like to rush in. I don't like to get after it. I don't like to apply huge leverage on a Monday. Right now, we just watched the market open. We're seeing equities come off just a little bit. We're also seeing some action in gold that's interesting. Bryn asks an absolutely fantastic question. Bryn 98, Shane, what do you have thoughts on gold being sideways while we're seeing a bullish USD? Well, I think that all these rate cuts and policy moves are definitely already priced into the gold market. I don't think there's any question about that. So I see gold rotating higher to 2750, but I don't necessarily see it happening right now. I think it's going to be a slow grind. And to be honest with you, Bryn, a lot of folks are just waiting on the U.S. election. We're waiting on the election here. We want to get that political uncertainty out of the way so then we can start pricing metals more aggressively. I don't see really any question about the long side of the metals market being the incorrect side. I definitely, if I'm holding, I definitely want to be long. I want to be long gold. I want to be long silver. So to answer your question right out of the gate, good question though, absolutely fantastic question. Mark Corb, good to see you. Yeah, gold all over the place. Gold's sort of a. We covered this last week. It's been in rotation for a while. There's been some great trades, but there also has been some really bad trades. I took a few of them last week that, you're sitting there, you're waiting for the market to move, and it doesn't move. Always remember the market doesn't have to move. So full disclosure, I was looking for a little bit better open to be trading the 9 EMA on today, but we're going to go ahead and we're going to line it up. I'm going to show you exactly how to trade it. I'm just looking at the numbers right now. It's one of our bigger YouTube videos ever. So if you tuned in and you saw the 9 EMA strategy and you want to be able to trade it, I'm going to show you how to add it to your chart, and I'm going to show you how to go ahead and pick a market that it may actually work on. So good to see everybody. Dragon 131, good morning to all. Ready to learn a new strategy? Well, the strategy is relatively simple. We're just going to cover the conventional 9 EMA strategy today. I'm not going to throw crossovers in. We're going to do that later in the week. We'll talk about confirmation. I'll talk about how I use Fibonacci's to confirm or deny a trade or not. But realistically, this is a very simple strategy to learn. The biggest thing you can do if you're going to make this thing a winner is you're going to have to know when to put it on and when not to put it on. Now, right now, it's the U.S. Open. It's 8:03 my time, 8:03 a.m. Eastern. A little bit under the weather. My Montana Grizzlies lost on Saturday in overtime. It's the first time they've lost at home in 3 or 4 years. It's an absolutely brutal game. But trading-wise, I always recommend everybody takes their time on a Monday. Full disclosure, last Monday I went down about $1,100. Fought back towards the end of the session, left Monday down 500. Didn't feel very good about it at all. Ended up having a tremendous week. Walked out plus about $1,000 on the week. That's pretty good trading. I could have saved myself a lot of time and effort if I wouldn't have gone down $1,000 on a Monday. So always remember that Monday is a time to game plan. It's a time to learn a new strategy. It's a time to scope the markets out, get set, game plan for Tuesday, Wednesday, Thursday. If you took a look at my Tuesday, Wednesday, Thursday numbers, I was up upwards of 3,500. So remember, every dollar you lose, you have to make back. That's huge. I want everybody to understand that. You don't have to trade on Mondays. I'm not trading today, but we're going to learn a new strategy. So let's go ahead and get on with it. Let me see. TM Tucker, good morning all. Happy Monday, Shane. Sound a bit congested. Hope all's well. I'm hoarse, TM. I'm hoarse. I lost my voice at the football game, overtime thriller, and we left it all on the field, and it wasn't enough. So I'm a little bit hoarse today. I do appreciate you guys bearing with me, though. All right, let's get on with it. 5 minute chart right here, YM. Now, the YM is the E-mini Dow. I'm looking for something that's moving. And right now, the Dow looks to be the biggest mover and shaker. We're off about 0.25%. Very rotational. We're going to look at the NASDAQ here in a second as well. But in order to trade the 9 EMA, first thing we do is we add it to our chart. Very simple. This is TradingView. You're going to go right down to exponential moving average. Very similar on MT5. Just go up to indicators, click on your moving average. You have to doctor it a little bit. You have to choose EMA within the moving average portal, but you should be able to do that relatively simply. Moving average right there, bang, moving average exponential. You'll notice the default setting is the 9 EMA. Okay, it is the 9 EMA. So that's basically what we do. It's very simple. Put it on the chart. So what should we be thinking right now? Well, theoretically, you had this big 5 minute chart right here. Now, you could have easily sold on that opening 5 and got chopped out. You would have stopped yourself out right here. So you probably should be long. If you were going to do this, you would have sold here, you would have taken the loss, and now you're long. Now, one of the great things about an EMA strategy is you're always going to be in the market. Once the thing crosses over your EMA, you're either going to be short or you're going to be long. This is very simple. That would have been your short entry right there on the opening 5 minutes. I don't recommend that. Let the waters sort of settle a little bit. Let's wait and see what happens. This, more than often, more times than not, this is the rule. Traders get destroyed in the first opening 5 minutes, opening 10 minutes, opening 30 minutes of the session. Why? Because nobody knows what's going to happen just yet. It's a chop fest. You see a lot of liquidity come in, and they're looking to drive the market right here. They're looking to drive the market down a little bit for a couple of reasons. Number one, they crushed all the overnight longs. Where was our overnight high? Right there. That was right there. Bang. That's your low. So theoretically, what happened? What's your low right there? Think about this, guys. If you're going to trade, you got to be thinking, okay, what's my overnight low? My overnight low right there in the London session's 42.4 and a quarter. Where did we go to? 42.422. That's not an accident. That's not an accident. Everybody got washed out. They went down. Everybody that was holding longs during the overnight got slammed right there just to see the market reverse. We talk about that. That's called a failed auction. We just put a beat the market maker strategy video out last Friday. That's a failed auction. So if I'm going into a session and I'm saying, okay, I'm going to trade the 9 EMA, I'm going to trade Fibonacci's, whatever I'm going to trade, immediately the first thing on my mind is, okay, where's the overnight high and low? I want to know exactly what happened during that London session. All right? What happened? You saw a bit of a sell-off. What happened here on the open? Went down, stopped everybody out, and then reversed course. So theoretically, for the fifth time, and this is all theory, remember that. Strategy is basically theory. We're looking for a theory that performs well. Take a look at what you have here. Nice big negative close. Okay, you probably sold. You got stopped out right there. Why would we get stopped out right there? I recommend the previous swing high or swing lows being your stop out point. There's the sell. You're going to sell right there on that bar close. This thing reversed, stopped you out. Now, should we be long right now? Yeah, we should be. Look at the 9 EMA. That's our 9 EMA. Price is above our 9 EMA. Do we want to buy it? Let's go ahead and put a few on. Is this the best location for us? Probably not. See, a true EMA trader, a true moving average trader would always be in the market. And that's one of the problems I have with this strategy because that's not necessarily what I like to do. I like to wait. I like to get my support and resistance levels, wait for them to be hit or violated or elected, and then we're going to get in and trade. So if I'm looking at this, I'm saying, okay, I'm short, now I'm long. You're probably long right after you got stopped out. So we're long from basically right now. Let's see what happens here with this E-mini Dow. Price, 5-minute chart. Remember, the smaller you get, the smaller duration chart you get, the choppier price action is going to be, the less consistent these things are going to be. I highly recommend a 30-minute chart. If you're going to trade U.S. equity futures, I'm looking at a 30-minute chart. If you're trading Forex pairs, a 4-hour chart, maybe even a daily. Some pairs don't have a big enough range, and you can trade a 9 EMA on a daily. That gives you a fantastic opportunity to win. So think about that. But we're going to scalp right here. So right now we're long. We're long the E-mini Dow. We're getting hit a little bit, but that's all right. We'll see exactly where the market goes. Big picture, I would expect this to trade up. I don't see any reason. There's nothing on our news cycle that's going to reverse this market, and we're just following our 9 EMA. Very simple, guys. You're short here. You're stopped out. Now you're long. That's all there is to it. Why? Bar close beneath the moving average. That's the sell. Bar close above your moving average, that's going to be your buy. Now, a lot of traders stop themselves out right away. They say, okay, I took the short, rebounded against me. We had a bar close above the 9 EMA. Now I'm out. I don't necessarily follow that. I'm not necessarily into that. And the reason why is because you're going to find yourself getting chopped out. I like that idea of using the swing highs and the swing lows as being your stop loss, okay? You want to make sure that you actually are working with the market structure, not against it. So by putting our stop loss above that swing high, that gave us a pretty good chance to the short and a little bit of room to work. So where would my stop loss be right now? Previous swing low right there. 5-minute chart. We're playing extremely tight. We're looking to get in on the action and try to make a few dollars. Now, right now, what are we up? Should be up a few bucks. Well, we're minus 20. We're up 20. We're minus 20. We're up 20. Welcome to moving average trading. So we're going to go ahead and do that. We're going to let that thing bleed. I think we're going to get paid, to be honest with you, 42.6. I would be surprised if we don't go up and take a look at 42.6. The pressure's definitely up. The 9 EMA got us in the market with the pressure, and that is the idea. That's the idea. So I hope my hoarse voice isn't annoying you too much, TM Tucker, but it is a little bit scratchy. I left it all at Washington Grizzlies Stadium on Saturday. Hey, listen, you got to enjoy yourself in this life. That's one of my simple pleasures is going and watching football games. I really enjoy them. I like watching the kids play. The compete level's always high. Not quite as high as in the markets, but pretty high. All right, guys, another mover and shaker here is an E-mini NASDAQ. Now, this is probably the ultimate mover and shaker. 5-minute chart. You can see just how big those 5-minute ranges are. That E-mini NASDAQ futures moves. I mean, there's moves and then there's moves. Now, right now, you're getting absolutely chopped up. You can see right there, you bought there. You probably got stopped out. You had that nice green close. I highly recommend not doing that on the first 5 minutes after the open. I would wait. Remember, they pay us to wait. They don't pay us to trade. In any case, right there, we're coming off, and then you had a couple of sell signals. Those haven't worked very well at all either. So, well, how would I attack this? 5-minute chart. It's incredibly congested. You can see we almost have a diamond formation setting up. It's just massive compression. Let's take this thing down to a 1 minute and see what it looks like. Okay, so do we want to do some ultra scalping? Let's just say we started our trading session right now, 4, 3, 2, 1. All right, there's our bar close. All right, I'm short. I'm short right now. I'm going to go ahead and stop myself out right above that swing high. So let's see what happens. Now, do we have any reason to believe that we're going to get a big move here? Not really. It's chopping sideways, but our rules tell us that once we get a negative close beneath the 9 EMA, then we're short. Now, right now we're taking heat. Our stop loss is going to be right up above this swing high. We're seeing a little bit of action here. Can we actually make any money doing this? It's hard. On a 1 minute chart, it's hard. You get into areas of big time congestion. You get into areas where you're just not really doing anything. It was back to Bryn's point. Gold's not doing anything. Well, this market right here is not doing anything. We're off about 0.5%. It looks like we're going to get stopped out. Does it mean anything, though? Not really. We're just chopping sideways. I highly recommend using larger time frames, but we do need to execute these on a 1 minute chart just to show you exactly what it is. So we sold right here. We had a negative close. We could have sold there, and we're going to get stopped out. Market's going against us. We're not quite out just yet, but the market's going against us, and it's just not – this isn't going to work on a 1 minute chart right now. Can we still make this trade a success? Yeah, I would just cut my losses and get out of it. But remember, if you're on a 1 minute chart and you're trading the 9 EMA, you're going to make 100 trades a day. You're going to be trading this thing. See, maybe we're going to win. Look at right there. Bang. We had a pretty darn good stop loss location right above that swing high. Do you think we're going to get stopped out? I think we are. I think we're going to lose this trade, but that's just the way that it looks to me. Maybe not. We might get a big sweep lower and get paid off, but the biggest thing you got to do right there, we're right up against our stop. Okay, I'm out. Bam, we're flat. So what does that really mean? Absolutely nothing. The price just rotated around. We just lost money, and we really don't have any leg to stand on. Okay, right here, bang, let's buy it. We got a bullish close right above there. We got stopped out. Let's reverse our position and see how this works. Now, remember, with moving average trading, you're always going to be in the market. You're either going to be long or you're going to be short. Now, I highly recommend, and I mean I highly recommend, picking a chart duration that gives you an opportunity to succeed over the long term. I wouldn't go any lower than a 5 minute. You're seeing right now how tough this 1 minute chart is. This is tough. I mean, in order for us to do this, we're going to have to do this all day long and try to get on more winners than losers. That's hard. I would much rather just scope out a few great trades every day and execute those as opposed to sitting here pulling the trigger 100 times, hoping that I win more than half of them. So in any case, we are officially long, and this one's making money. There's your stop loss. Shane, you haven't talked at all about profit targets yet. Sure haven't. Your profit target, I would say at least a 1-to-1. I took a lot of flack on our YouTube channel for saying 1-to-1. I've been trading 1-to-1s for a decade, so I don't really listen to much of the criticism on that. If you wanted to be a trend trader using the 9 EMA, you're welcome to. 1-to-2, 1-to-3, 1-to-4 risk versus rewards. That's just fine. So if we were going to do something like that on this trade right here, let's see, we're long from right there. So we're looking at our stop loss. Let's see, 20,133.75, and our stop loss down there at 21.11. You're looking at probably 22 points. So you're going to want to go ahead and shade that. I would say that our entry is somewhere right in here, 21.33. So probably going to be looking at 199s. Somewhere up in there. That's going to be what? You're 3-1? You're 1-3? That's what all the textbooks say, guys. That's what all the textbooks say. They say, no, you got to have a big risk versus reward because your winners outpace your losers. I don't personally believe in that. I believe in taking money. Right now we're up. We're up $300, $420, $820 on this trade. This is all demo money, of course, but we're ahead. Do I want to let this thing run and try to make $5,000 or $6,000, or do I want to take $800? I'm pretty sure most people watching this stream will take $800 for a day's pay any day of the week. All right. I probably would be looking to take my money right now. Why? It's a 1-to-1. It's clearly a 1-to-1. We won. Let's rack it. We'll let it run, though. We'll let it run for the sake of those academics out there that say you need to be a 1-to-2, 1-to-3, 1-to-4 trader. Well, look, maybe we're going to make a stack of money. $1,380 we're up. $1,400. $1,500, $1,760, $1,960. We'll let it go. We'll see what happens. But for me, I would have already taken the money and been on to my next trade. That's what I would have done. Let me see right here, TM. All good. I know the feeling. I get the same way with my Steelers. No, I tell you what. I left it all on the field Saturday, as they say, and we left very disappointed. 55-48 in overtime. We can't stop anybody. Montana Grizzly defense. If there's a couple of you watching this live stream this morning, keep chopping, keep working, just keep getting better. You got to keep getting better. It's a long season, and who you are today doesn't necessarily mean that's going to be who you are tomorrow. Keep working, keep chopping. Defense, though, has really been a challenge for us this year. So this trade right here worked. I mean, that's a pretty good thing right there. $1,720. Traded 4 lots on a NASDAQ, E-mini NASDAQ. Pretty good looking move there. Let's go E-mini Dow. Did we get stopped out? Are we in the? No, we're winning. We took the buy, we took the bid signal, and we're still doing pretty good here. So I would recommend a 5-minute chart probably. I don't know that I would be interested in a 1-minute chart, but we just made a stack of cash on the NASDAQ. This trade right here is going higher too. We're up about $120 we bought in, but you're still very bullish here. So a couple ways you can manage these trades. The first way is just let it run to your risk versus reward. That's sort of what I recommend. A lot of traders, what happens is you wind up cutting off winning trades and you let the losers run, and that's a big problem. That's a big challenge. So what we can do is we can just build positive expectation trades, positive expectancy. Now, right there, swing low. That's your stop loss. So if we have a set profit target, when you put these trades on, you just let them run. You just let it run to your target. It either hits your target or it stops you out. That's life. That's the way that it works. Now, another way to manage this is you would be looking to get out potentially, and I've got this question a lot over the last few days. You get this close beneath the 9 EMA, that's when you would exit the market. So you theoretically, it's sort of like a trailing stop. You're going to ride this thing until you get a negative close beneath, and then you're going to go ahead and exit the position. And I don't have a problem with either. Personally, I would go in with a set risk versus reward, and the only reason I would be trading these types of markets with this type of strategy is if I believe they were going to move. And right now, it's the U.S. Open. We're about an hour into the session, about 50 minutes into the session. We're looking for that action. We're looking for that volatility, and it really is. I mean, it's working for us. We're up $260 here, $260 or $240. Let's go ahead and take our money. Let's take a look at our NASDAQ trade. What's happening on the NASDAQ? Well, we're making a stack of cash here. Let's go ahead and flatten it. All right. Did we just have a pretty good session? Not bad. $2,200. We just made $2,200 in what, about 15 minutes? That's why everybody trades, guys. The promise of big money, and that's just a demo trade. Those are 4-contract trades. The first criticism I'll get for this live stream is, Shane, you're trading huge size. Not really. Any of you that are trading a demo, any of you that are trading for a prop account, any of you can easily trade 4 contracts. Believe me. I mean, unless you're trading a very, very small prop account, you can trade 4 contracts. That type of thing right there is very doable. Now, the biggest thing we have to watch with our EMA strategy is our stop losses. I don't want anybody risking an absolute fortune on any one trade because we just showed how volatile this is. I mean, yeah, we just made $2,200, but if we're on the wrong side of those markets, we can lose $2,200. You're talking about trading NASDAQ on a 1 minute. If you're going to do that with a 9 EMA, you need to do it probably in the first hour or so, hour and a half of the New York session. You don't want to be doing this in the afternoon when it slows way down. Maybe do it during power hour, that last 25 or 30 minutes of the trading day. You could do that. But what you don't want to do is you don't want to be sitting around here during lunchtime and just get absolutely chopped to death. You don't want to do that. It will lose money guaranteed. But if you know when the markets are moving and which markets to play, you got a pretty good chance. You got a chance to make some money with that 9 EMA. That's as simple of a strategy as there is. Bars break above, you get a positive close, you buy. Bars break below, you get a negative close, you sell. Where the art form is, and where really being a true professional is understanding when to put that trade, when to put that strategy into play. I say that every day we're on. Understand market state, understand trends, understand rotation. A lot of people hate rotational markets. When I was brought up, when I was learning, my uncle hated them. He was my mentor. He was the guy that put all this stuff together for me and said, hey, here's how you trade and here's what you do. He hated slow markets. When the market was slow, he would just leave. He wouldn't trade. He had the benefit of being wealthy. He didn't have to trade. But when it was slow, he just said, I'm not doing it. I've found a lot of opportunities in slow markets. When we get a market that's rotating, where it won't break, you can make a fortune off of it. You just sell resistance and buy support. That's my bread and butter. That's what I do now. I don't even really care if something's trending. I know how to trade it, but I don't show up every morning going, ooh, what's moving today? I'm going to nail it. You don't have to. Market's slow, you don't put on a 9 EMA strategy because you're going to lose. But right now, market's moving. The volatility, we just showed you. We got long at the right time, made money. That's all there is to it, guys. Nail down your stop out points. Be able to do that. If you can do that and balance risk versus reward, you're going to do very well. If you can't do that, I don't care what your strategy is. I don't care if it's stochastics, RSI, Fibonacci's, whatever. You will lose. Risk versus reward is everything. With a 9 EMA strategy, it's even more important. You've got to be able to say, hey, I'm risking this. What do I need to get? At least a 1-to-1, guys. If you're not taking at least a 1-to-1, you're going to lose in the long run. That's all there is to it. This market right here, we've already exited, but it's going to the promised land, it looks like. I think we had a pretty good call on this one. Let me see. Nicholas, good day. Please, how do you trade with FVG? How do you use the RSI indicator to place trades? Nicholas, I'm going to have to cover that on a different stream. I'll talk a little bit RSI later today. Honestly, Connor's out this week. Trading coach Connor Woods, he's out. He's on holiday. He's more of an RSI expert than me. I can show you how to do it. Essentially, this is, we can do it real fast here, RSI. Relative Strength Index. And it's very simple. See this? These are your bands between 30 and 70. If you're beneath 30, you're oversold. If you're above 70, you're overbought. The idea is that you're going to sell once you get above 70 and you're going to buy once you get under 30. Does it work? No. You got to qualify it just like anything. You got to know when that RSI means something. Right now, if we get up over 70 and we start selling into the market, I'm not saying that you can't make money doing that, but what's probably happening is you're fighting a bit of an intraday trend. And when you fight those trends, that's the biggest problem with RSI and stochastics. That's why it's sort of a confirmation device. You use it to confirm your trade ideas. You don't necessarily use it to place trades. You can see right here, we're going to go up over 70, and that's going to be a signal to sell the market. The problem with RSI and stochastics is that if you end up fighting a real strong trend, you lose all your money because it's always going to look like it's overbought or oversold, and you're going to be going against the grain. RSI is a fantastic confirmation device. If you wanted to use RSI, and it's actually in the next video we're making, which is 20 EMA strategies, the RSI is a confirmation tool. So if, in fact, let's say that we had a 1-minute NASDAQ chart up and we were in oversold territory and we watched the market break above that 9 EMA, then we're going to go ahead and buy the market, and that RSI is going to be confirmation. That's all. I would definitely look at RSI as being a confirming indicator. I don't necessarily know that I would trade it naked. But remember, there's like one rule on my streams. If it makes money, it's the right answer. That's for sure. All right, guys, I'm going to go ahead and sign off. We're pulling double duty all week long. Be sure to check your stream schedule. It's going to be unconventional. We're going to be we're going to be all over the place. We're going to be here for the opens. We're also going to do a few Asia Pacific previews, which are going to be in the afternoon, my time. And then we're also going to have a few mid-session briefs this week. We're also going to have CPI Live for you. So be sure to tune in. CPI Live, I'll give you all my analysis. We may do the 9 EMA. We just showed you how to make money using it. Remember, strategies, they're all winners and they're all losers. If you know market state, when a market's trending and when it's flat, and you know when to apply your strategy, whatever it is, you're going to make money. But that's the art form. That's the art form. That's what being a professional trader is all about. I know exactly how to trade trends, and I know how to trade rotation. The single biggest challenge for me is to figure out what exactly is the market doing and how can I capitalize on what it's doing. Think of your screens as an ATM. You reach in and you take the money. There is no holy grail. There is no magic strategy. The 9 EMA may be something you really like and you want to use it. Use it. Understand that when you get into flat markets, you're going to lose every trade. But if you're trading the correct market, when that market has the volatility you need to make a living, then you're going to be in pretty good shape. Trading's fun if you know what to do. Let me see. Hey, Shane, got a question on the last trade. The E-mini on the 5-minute. You mentioned where our take profit would be. Would it be useful to use a trailing stop or looking back for the last swing higher, swing lows? Trailing stops are fantastic. If you want to use them, go ahead and use them. I don't like giving any money back to the market. So this right here was our NASDAQ 1-minute chart. You can see that that was going to be our swing low. Okay, that was going to be our stop out point. You could easily try to work symmetry. I call it symmetry trading. You'd move your stop loss up beneath each 1-minute bar. And like right there, once that symmetry was broken, you would probably stop yourself out up here. That's one way you can trailing stop. I got away from doing that when I was a young trader. That's what I did. I did symmetry stops, and I was trying to hit these home runs and basically make they have the $20,000 days and stuff like that. But after a while, you start to realize that symmetry isn't really reliable. You'll go up a couple of bars, and then you'll get stopped out, and you'll only make a few bucks. And what I found for my trading was just take the money. Take the money front and center. So I always go in with fixed risk versus rewards, and I know exactly what I want on every trade. If you go back, you watch this trade Real Money last Friday, I sort of botched the range trade. I left a lot of money on the table there, but I knew in my mind what I wanted from the trade. We sold 3 WTI crude right towards the end of the session, sold 3 on one of my range numbers, okay? Came off. Okay, we ended up leaving that trade with about $70, which is nowhere near what we should have made. And the market traded down about a quarter. So we could have made about $1,000 on that trade, but I got out very quickly. Why? My situation. I had a good week. I was ahead after one of the worst Mondays I've ever had. All right, I tell you guys not to lose money on a Monday, and I got hit pretty good. Clawed my way back, put together a really nice week. There's no way I'm going to lose all that money on a Friday afternoon. So I took the trade, executed it because I wanted to trade live for you guys with real money. And, my execution wasn't very good. My point is this. If you have a strategy in your head and you know exactly what you want, you're going to be okay. Even though I cut that trade off, I knew what I wanted out of the week. I knew what I wanted. Now, maybe I should want more. Now, that's a topic for another stream. But it fit right into my game plan. So I don't feel bad at all about leaving the money on the table. I know I'm going to get it back this week. You guys sit here all week long, 5 days. You should be leaving every Friday with money. You should be leaving every Friday with money. I mean, if you're not, you gotta figure something out. The 9 EMA can help you. It makes it real easy, guys. It makes trading real easy. All right, everybody, I've rambled on long enough. Sort of a poetic or a waxing poetic Monday morning. Let's see right here. Good one, Shane, a.k.a. Mike Gamble's. Good to see you, Mike. Welcome. All right, guys, I'm going to go ahead and kick off here for a few hours. Like I said, double duty all week long. Connor Woods, the powerful Connor Woods, is on the beach down in Mexico. I wish him well. Looks like they were having a good time. So you guys enjoy it. Soak up the sun. and we're going to soak up some money. How's that? We're going to make a few bucks this week. Today, though, very, very conservative. Not much on our economic calendar. I saw my mailbox there. I've got about 70 messages, so I'm going to have to, you guys be patient if you reached out. I'm going to go ahead and dig into those and see if I can answer those, hopefully before lunch. All right, everybody, I want to thank you for joining me today. I'll be back here in a few hours. You guys trade the action well, and we'll talk soon. See you.